Hi everyone, welcome to our Budget and Credit 101 webinar. Glad to have you here. Just going to give everyone a quick moment for everyone just to pop in. All right, just a few housekeeping rules or just some things for you to know. We'll be announcing the gift card winner at the end of this presentation, right before the Q&A session. So if you do want to stay for the Q&A session, feel free to do so. There will be a poll that will pop up halfway through this presentation, and we would really appreciate if you just take the time to fill it out real quick so we can continue putting more of these on in our community. And at any time, feel free to send us a message or to submit your questions ahead of time so we can answer them at the end. All right, I'm gonna get started. First of all, you all deserve a pat on the back because I know coming to a financial literacy webinar isn't exactly everyone's favorite thing to do, but you know, this just shows you're taking time to do little self-improvements, and you know, that deserves a good kudos. So congratulations and thank you everyone. All right, so a little bit about Fitzsimons. We are a local credit union that is founded in Aurora, Colorado, but we also serve the community in Arapahoe, Adams County, and Denver County as well. We offer a full line of financial products and services. So, you know, loans, checking accounts, savings accounts, just about everything that you would find at a traditional bank, we offer as well. It's really easy to become a member with us. All you have to do is, you know, be part of Arapahoe, Adams, or Denver counties, or have a family member that currently banks with us as well. For those of you that don't know the difference between a credit union and a bank, well, we are almost the same thing. Just one of the big differences is with credit unions, we are a non-profit or not-for-profit, and banks are for-profit. So basically what that means when you're a member with us, any profit we make at the end of the year goes back to our members in one form or the other. And that could be keeping our loan rates as low as possible, making sure we have the best rates for savings and checking accounts, and keeping fees low as possible as well. When you're a bank, you're a customer. With a credit union, you are a member, and your membership signifies that you are part owner of that credit union. So basically what that means is you get to have a say on who our board is. So every year we have an annual meeting, and you get to have a choice and vote for who you want to be on the board. But that's just a quick rundown on who we are and, you know, what we do for the community as well. So some things we do is we like to offer financial literacy, you know, seminars, webinars, you know, things out there so you can continue on the path to financial well-being. Another thing we specialize in is lending and you know, banking for the underbanked or underserved. So we often offer loans that to those who are often aren't able to get loans at other financial institutions. We do I-10 lending. That's another special thing we do. But yep, now to the main presentation. So what we'll be discussing today is ways to track spending habits and finding ways to save, how to set short-term, long-term, achievable financial goals, some useful tools and tricks to kind of help you reach those goals and to make sure you're on that path of financial success. We're going to discuss, you know, everyone's favorite, credit reports, credit scores, what information you need to look for, and how to either keep your credit scoring report in good shape or how to improve that. And then, you know, understanding credit reports, and, you know, if you do find something on there that shouldn't be there, the process you need to take to report that. And of course, tips for using credit wisely. All right, so why do you need a budget? A lot of people find budgets a little confining. They think it's, you know, when you have a budget, you're restricted and you're not able to, you know, enjoy life to the fullest. And, you know, that's not necessarily the truth. Budgets are basically creating a good spending plan, so you can help figure out, how to live your best life as much as possible. Just an FYI, we have a nice little guide that I'll be sending to everyone that's registered in additional format, so you can always print this and either work on your computer, or if you're old-fashioned, you can also write and figure out your budget and spending plan that way as well. But a spending plan is really helpful for you to help reach any goals you have. It could either be paying off debt or going on that dream vacation. For those that are a fan of like Marie Kondo, it's just basically kind of figuring out what sparks joy in your life, and making sure you're able to enjoy more of those wonderful and fun experiences that life has to offer. And even though money isn't everything, it can be definitely helpful and reduce stress in your life. So for example, if you do have a handle on your finances, you don't necessarily have to worry about as much stressful situations from when your car breaks down, or when unexpected things happen in life. So that's why having a budget / spending plan is very important. Now, first step when it comes to setting up that spending plan is figuring out what your goals are. So we have 3 types of goals. We have your short-term goals, which are goals you can usually achieve within a year. You got your medium-term goals, which is 1 to 5 years, and long-term goals, which is greater on and kind of looking way on into the future. Now, just to note, like, your short-term goals and medium-term goals and long-term goals are a very individual thing. So someone's short-term goals could be someone's medium-term goal. So for example, an example of a short-term goal is maybe that dream vacation, or maybe it's just paying off debt. Someone's medium-term goal could be getting into that house, or that could be someone's long-term goal. It just all depends. Now, the way you can reach and help achieve your goals is setting SMART goals, which I'm sure a lot of you have heard before. SMART goals stands for creating something that's specific, measurable, adjustable, realistic, and time-oriented. So, a classic example of that is, let's say you have a credit card bill of $1,200 and your goal is to pay that off. So let's say you take the time, look for your finances, and then you just figure out, oh, if I make a few little cuts and adjustments here and there, I'll be able to get that $1,200 to pay off that credit card. So let's say you've noticed for the past, 5 months, you've been spending $30 or $40 on the weekend out with friends. So you decide you're going to reduce that, and you're going to take that $40 each week, and within the year, you're going to have that extra savings available to pay off that credit card. Now, when it comes to budgeting, you need to figure out your income, so the money that's coming in. So that's divided up into fixed and variable. So with fixed, it's usually your salary. For the most part, how much you're earning every 2 weeks. And then there's variable, and that can come into maybe tax returns, or maybe you have a side hustle and you don't always get the same amount each month, or sometimes you get gifts, or all sorts of things. And then you got your expenses. So you got your fixed, which comes to a lot of times rent, bills, food. A lot of times that can be fixed or variable, but a lot of times you can set that down to a specific amount. So it's usually things that don't change very much. And they got variable, which a lot of times is just based on your behavior and isn't always necessary like a necessity. All right. So this isn't exact science, but a lot of financial experts believe that your needs should make up 50% of your budget. So that can include, housing, utilities, heat, water, food, medicine, any loan payments you have, so any obligations you have, those sort of things. And I just wanted to break that down more, since housing can be very crazy, and it's really hard for people to determine how much that should be in their budget. From what I found, it should be about 30%. So from that 50%, 30% at the most should be dedicated to your housing. And then you got your wants. A lot of that can be based on your monthly spending, any streaming services or, little subscriptions you have, vacation, and then, things that are nice to have like clothes, personal care, or just going out and enjoying life. And then what about that other 20%? Well, that can be based on, saving for the future or any debt repayment obligations you also have. General rule of thumb, is to make sure you pay yourself first. So what that basically means is you want to make sure when it comes to those goals or, future plans you have, is that you automate that as much as possible. So for a lot of people, let's say you are trying to, save for retirement. Now, before you end up spending all those want money, you dedicate $200 to that account automatically. So you're making sure you're hitting those savings goals. If you do have any credit cards or student loans and those sort of things, you also want to make that a priority as well. And it's always very important, so you can deal with all the weird mishaps that life throws your way, that you have about 3 to 6 months of living expenses set aside. Now, that's up to you to determine, but those 3 to 6 months is like basically if you had to live on the bare minimum. So, if, as a lot of people have learned during the past year, if you do unfortunately fall into a sticky situation, what do you need to survive? You might have to give out some of those like things that you were used to spending, so those fun nights out, or discretionary spending and those sort of things. So those are the things you should be looking at. And for example, when you're looking at maybe your wants budget, so let's say every month you have $100 that you would like to spend on clothes, and then you found that month, oh, I only spent $50. Well, instead of taking that $50 to buy something else that maybe you don't necessarily need or is, working towards any goals you have, take that $50 and put it towards your savings or those goals that you have. All right. And then I wanted to make what happens if you don't have any of those emergency savings. Well, they're always important to have because you never know when you have a pup who decides to, decide to eat his seizure medicine, and then you have to take an emergency trip to the vet. So that's why having that emergency fund is very important, because unfortunately things like that happen in life and you don't really expect it to happen. All right, so as mentioned, that's the ideal when it comes to creating a successful budget, but everyone's life or situation is a little different. So you'll have to look at, if you do have a family, you're going to have to dedicate more of that onto groceries or more of that on needs and less on maybe those wants and that sort of thing. But just the thing to keep in mind, every place that you can save or move around, it's another dollar you can put towards something else, either paying off debt or reaching towards your goals. So when it comes to your budget, you do want to look at where your money is going and how much is coming in each month. You'll want to create different categories for your budget and spending plan, and I'll show you an example in just a moment. So we're going to call it a cash flow statement, spending plan, budget. It's all the same thing. So an example of money we have coming in, you got your salary, your side hustle, if you're lucky enough, gifts. If you happen to have accounts that do earn a lot of interest or dividends, that can be a source of income as well. All sorts of things. And then you want to create, categories for the money that's coming out of your budget as well. And that can include all sorts of things. Everyone has food, housing, bills, all sorts of things. Now, these can change in and out, depending on what's most important to you or what your focus is, but those are just some examples of things to include in your budget. So we're going to look at the budget of Lena. So this is a yearly expenditure. So Lena, you know, she makes a decent salary. She gets like $45,000 or so. She also has a side hustle. Let's say, I don't know, she teaches dancing on the weekends on the side, so she makes decent money doing that. So at the end of the year, she has $56,663. And this is, you know, how she spends her money or plans to spend her money throughout the year. So I decided just to add some short-term, long-term goals on here just to see if she's going to reach those or not. So let's say her short-term goal was a vacation to Hawaii. Well, she really only has $2,000 for a vacation to Hawaii. Now, it's probably possible that you can get to Hawaii on $2,000, but it's not very likely. So if she does want to reach that goal, then she might want to look at, you know, reduce spending in other categories so she can reach that goal. Now, her long-term goal is to retire by 65. As you can see right here, her savings are $3,200. And if she wants to maintain the standard of living that she has now, she's going to need to put those savings, put more savings towards that goal so she can have a better chance of reaching that. Unfortunately here, I don't know if those savings are for her emergency fund, which I hope she has now, or if she's using those towards retirement. But those are just kind of things to think of when it comes to planning out a budget. And this is a really cheesy thing I like to do when it comes to my monthly budget. I like to also kind of just look at things I feel like I'm blessed for. So, you know it's really easy for, to get really fixated on, trying to get to that next best thing. But sometimes it's important to kind of take time and kind of look at what you do have. So like in Lena's case, she's already a homeowner, so she has that mortgage. So that is something that she could feel really blessed and happy for. Or, she has a work that gives her great benefits. So she doesn't have to worry about maybe some of those education expenses or that gym membership. Or, it could be something as simple as she shares the Netflix password with her boyfriend. So that's not something she has to spend too much money on either. So it's just a little silly, but I think it's really helpful to have. Now, another thing to keep in mind is, as your goals change or life situation changes, it's always important to make adjustments so you can continue on reaching those long-term, short-term, or medium goals that you have. And especially if you get increase in either, a salary or a decrease in salary and those sort of things, you want to make adjustments as time goes along. So another thing to look at when it comes to, looking at your budget and maximizing it as much as possible is looking for those spending leaks. So, we're all guilty of, spending that $5 or $6 here and there. So I know the classic example is like the latte factor, where if you spend $5 every day at Starbucks, how does that add up over time? And that's true, $5 doesn't seem too much in the moment, but if you look at it over time, it certainly can add up. And, that, let's say maybe $300 you end up spending a year could have been put towards either paying off debt or achieving another goal that you have. So one thing you can do is, either looking at your statement or just opening up your online banking or mobile banking app and just looking through the monthly expenses. And, as cheesy as it sounds, but, figuring out which ones were necessary, figuring out which ones really brought you joy and, you were happy that you did spend that $5 here and there. So, those little expenses aren't necessarily always a bad thing. So, for example, let's say you are currently a college student and you're extremely exhausted. Maybe that $3 or $4 coffee was totally worth it and, helped you reach that next goal. So it's just something to look at. But if you notice, like, let's say what you're spending on really isn't, adding anything to your life or bringing you joy, it's time to reduce those expenses and cut them out of your spending plan altogether. And it's always important when it comes to those little discretionary areas is to set a hard limit. So I think an example I used earlier was clothes and having $100 monthly limit on clothes. So it, decreases the chance of you overspending on a certain month, and just keeping consistent with that. And then there's another thing to look at, which is the step down principle, which is another way of looking at what is most important to you. So use the staircase method or principle to kind of figure out, if you have a specific item or thing you need, what's the most expensive and least expensive, and where does your priority fit in that? So the example here is clothing. So at the top you might have the department store, and at the bottom you'll have the garage store. But you can use this for anything. You could use it for a mattress or a new phone or those sort of things. And for someone, they might need the newest iPhone, and that's really important for them to have, and that brings them a lot of joy. But for someone else, they might be happy just having the basic flip phone, because their basic needs is they just need to call someone or just maybe text someone, and that's really all they need it for. Some other practical money saving tips is, if you have any debt, make sure you make that a priority and pay that down. And there's two methods to doing that. You have what is essentially the snowball method. So that's basically if you have multiple forms of debt. So let's say you have credit card debt or maybe multiple credit card debt. You focus on the lowest source of debt first, and you make the maximum payment towards that while making the minimum payments towards your other sources of debt until you pay that off. In a way, it's kind of like gamifying the debt repayment experience. Kind of example of is, when you start out playing video games, the first level is always the easiest, but your ability to achieve that first level motivates you to go on and on and on. And that's kind of how the snowball method works. Your ability to pay down that first source of debt motivates you to tackle on those other sources of debt until you're able to accomplish your goal. You have the avalanche method, which is the most logical method because you are focusing on the highest amount of debt that either is the highest amount or has the highest amount of interest, and you're dedicating the most resources towards that will make the minimum payments to the other sources of debt. So those are just some things to keep in mind. If you have a mortgage, make sure you can either talk to a financial counselor and see if it's a good move for you to do a refinance and either get a better term so you're paying less in the long run, or you're creating something that fits more within your budget currently. And you can do that for other loans. You can either look at doing a debt consolidation or refinancing your auto loan as well. Another tip is to look at seeing if you can bundle your insurances together. So let's say if you have something for your auto or life insurance and that kind of thing, a lot of times you can get discounts for those sort of things. With credit cards, I'll talk more on this later, but always make sure you are aware of what you're signing up for when it comes to your credit card, and if that credit card is most beneficial to you, either lifestyle-wise or financially. Another thing I just wanted to bring up is one thing that really does irk me is, paying, a financial institution to keep your money somewhere. So I know this is a plug-in, but, more and more financial institutions are knowing the importance of having free checking accounts that, don't require a monthly minimum, where let's say you have to have $500 in that account at all times, and if it ever goes below that, all of a sudden you get a $30 fee. The importance of just having a free checking account just to keep your money in there safe, so you have your money there when you need it. And I did just want to bring up that we have multiple checking accounts here at Fitzsimons. We have a regular checking that has no frills to it, but we also have checking accounts where you can get either cash rewards or rewards for online stores like Amazon or Google and those sort of things, and all these accounts are free. It's just something you should always look into when opening up a financial institution, because you shouldn't get charged for just keeping your money there nice and safe. It should be there for you, and you should have more of it for what you want to spend on life. And since I mentioned earlier about auto refinance or mortgage refinance, I did also want to bring up, we have two different promos currently going on. We have an auto refinance offer. So if you bring an auto loan from another financial institution to Fitzsimons, we will give you $200 cash back, 2 months of no payment. And that offer is available till the end of March. And then we also have another promo going on with mortgages. So if you refi your mortgage, or let's say you just need to use your home for equity, we also have a promo where you'll pay no closing costs. But yep, that's all I want to discuss in that area, but just good things to have. So now we're going to go into different budgeting methods. Now these budgeting methods are a bit old school, but they are, true things to keep in mind. So we have the receipt method. So the receipt method generally is actually just a really good method when it comes to planning out your budget. So the receipt method requires you to keep all your receipts from the purchases you make throughout the month, and then you divide those receipts into different categories. So for example, when it comes to grocery shopping, you keep all your grocery receipts and you divide that up into the food budget and those sort of things, or food category. And then you take those receipts and you collect them from a 3-month period or so. You can also do it longer if you wish. And so let's say, for example, you have that food category. You add up all those receipts from the 3 months, and then you divide it by 3, and that number you get at the end roughly shows you this is how much you spend a month on food, and this is how much you should allocate for it. If you find that that category seems a bit high, well, it tells you need to make a little adjustments to keep it down to the budget or spending plan you propose for yourself. You have the envelope method, and this actually is a budget method where you keep all your cash in envelopes. Now, for some people, it's do this with every category that they have. So they have an envelope for food, or I don't know, clothes, or those sort of things. But these days, most people don't do that. If they do the envelope method, they only dedicate it for a category they have a habit of overspending on. So for example, let's say you have a category just for entertainment. Well, you just carry the cash in the envelope just for entertainment. And then once you run out of cash at the end of the month, well, then you can't spend any more money on entertainment. There's alternative methods that you can use, but some people do still use this method. Then there's a checkbook ledger. This is what people used before, you had online or digital banking. So you just write down every expense you make or money coming in, just so you know how much is in your account each month. Some people keep a financial diary. This isn't as much of a budget method as it is just kind of maybe looking into like, is your spending based on emotions or those sort of things. And then you have computer programs, Excel, which is what I use, or some people use QuickBooks, or different apps that are out there. And just some different apps that you can look for are, we got the trusty Mint, which a lot of people use. Mint is great because you can connect pretty much all your financial institutions, and it can give you a good overview of what's happening in each bank account or financial institution account that you have. It can help you create a personalized budget, and it can also send you notifications if it sees any weird activity happening in those accounts. And this can be really useful if you happen to have an account with a bank or credit union you don't happen to check on very much, but that also just means that account is more vulnerable to fraud. And as a suggestion, I always suggest people at least check on their accounts at least once a month, if not more. But Mint is a really helpful tool for you to use for that. We have Good Budget, which is basically an updated version of the envelope budgeting method. So you can create virtual envelopes for all your categories. You can share a budget with a spouse or your household and that sort of thing. And you can even set little financial goals and categorize those things. So for example, let's say your big goal is to buy a new car. You can have something in there that helps track your progress towards that goal. I'm mentioning Acorn, but there's a lot of apps that are similar to it, and it's just kind of a good introduction to the world of investing. It does it on a micro sense. You can dedicate a certain amount of money each month towards investing, but Acorn can also round up the remaining dollar of each purchase and put that towards your investing fund. It's nice because it will automatically invest into diverse stocks and bonds, and you can choose how risky you want to do that. And it's just always nice. One thing to note about Acorns is it does charge about $1 a month, and generally it's not beneficial to you unless you're able to put in $2,000 in there right away, because that kind of counteracts the $1 charge it's making each month. So that's just something to note. But if you're new and want to get into, planning for retirement or investing, Acorns could be a good option for you to use. That is another one I looked at, which is a good app for couples and families who are sharing a budget. It allows you the ability to also hide, certain financial information or keeping it confidential from a partner or family member. So you do have that option, but you can also kind of see like where your spouse is spending money and where you're spending money, and if you're able to meet the financial goals you have set together. And it also has a nice reminder to set money dates so you can continue on the discussion with money. And one of the most important financial apps you should download is your personal financial institution app. That's because it allows you to do so much. You can check on what's happening in your account, and a lot of them have a lot of nice features. For example, with the Fitzsimons app, we have Zelle, which gives you the ability to send money or request money from someone else, even if they bank from a completely different financial institution, for the most part, free or at a low fee. We also have the ability to check your TransUnion credit score and report for free as well. And then we're also coming out with Card Manager, which allows you to, set spending limits on your debit or credit card. You can also set alerts. For example, if your credit card gets used either at different retailers, or let's say you have it set to only have purchases within a confined area, those sort of things. It has nice security features to it. So yeah, things to keep in mind. When it comes to setting a budget, keep a positive attitude. It's not necessarily has to be a chore, but it's always kind of important to kind of, like I kind of mentioned earlier with setting those money dates with couples, it's also really important to set money dates with yourself and kind of see where you're at with your budget and if you are able to achieve the goals you have set out for yourself. Stay motivated, make sure any goals you set are achievable. And when it comes to setting those money dates, I don't know, somehow make it like a really nice experience. Either make yourself your favorite cup of coffee, and then if you want to put on a show you've watched a million times in the background just to kind of make it a more enjoyable situation, feel free to do that. But yeah, it doesn't have to be a routine. It can be fun, and it can be very empowering. And as always, kind of what I mentioned earlier, make sure that the plan fits to where you are now. So, when, life changes, your budget should also change as well. And as another reminder, if you are having a budget with a couple or a family, always make sure to communicate just to make sure, you're meeting goals together and, you're keeping life stress-free as much as possible. Now we're going to talk about credit building. So just an FYI, there should be a poll that should be popping out anytime now. So if you do see that, just take the time to fill it out. We appreciate it. But I will continue on to the next part. So what's a credit score? So the credit score is a number that represents your credit worthiness. So to put it in the simplest terms, it basically tells lenders how likely are you to pay money back if you borrow it. That's the basic gist of what a credit score is. As always, the higher the number, the better. And, it can fluctuate up and down. So most financial institutions use what is called the FICO score. And this has existed since 1989. So it's been around for a while now, and that ranges from 300 to 850. But there's also the Vantage score, and it's becoming a little bit more popular as time goes on. And now it currently ranges from 300 to 850. Now, when this started back in 2006, it ranged from 500 to 990. So it definitely did make things confusing for the certain financial institutions that decided to use the Vantage score. But they've made an update to it just to kind of keep it up with the FICO score. So the Vantage score was basically a collaboration between the three credit bureaus, which is Experian, Equifax, and TransUnion. They came together and they created this score just to kind of keep things more consistent. And I'll go into more the differences between the Vantage score and FICO score, and why a financial institution might want to use the Vantage score, you might want the Vantage score. Oops. So the components of the FICO credit score. Now, just to note, each of the credit bureaus kind of, determines your financial information that makes up your credit score a little differently. They factor in things a little differently, but on average, this is what makes up the FICO score. So 35% of it is your payment history, so your history of paying things in a timely manner. The other 30% is what you owe to creditors. So basically your utilization, roughly. When you're mentioning it with credit cards, you get a spending limit of, let's say, 1,000 or 2,000 or anything like that. And the more you use up on that credit card utilization rate, that can kind of go in and factor in to that score. I'll explain that a bit better in just a moment, but that's also what is factored into there. Your length of credit history, so the earliest established credit that you have. So with credit cards or your first loan, those sort of things. New credit, those are usually inquiries and things like that. So anything new that you add to your credit portfolio. And then the diversity of your credit. Oddly enough, when it comes to the credit score, the more diverse your sources of credit or lending, the better. So they do like to see that you have credit cards and auto loans or personal loans and that sort of thing. But the Vantage score does calculate things a little differently. So 40% is on your payment history, 21% is on your length of credit or age of credit, 20% is on the credit that you use, so that diversity of credit, 11% is on those balances or debt that you have, and then 5% is based on recent credit behavior or those inquiries, and then 3% is on the available credit. So why would you want the FICO score, or why does the FICO score, or not FICO, but why does the Vantage score exist? My apologies, that should have been Vantage score at the top of that, so that was a typo on my part. But the reason why you might want the Vantage score is if you are really new when it comes to credit, it gives you an easier time establishing that history. So you're able to build up that credit score, credit history faster and have a more favorable score. That's why originally when the Vantage score was introduced, people started at 500 and not 300. But that was one of the main goals of the Vantage score. Another thing about the Vantage score is it can be more forgiving on past mistakes. So if you've had anything that's gotten sent to collections, or if you've missed payments and those sort of things, the Vantage score can be more forgiving of that history. And the other reason the Vantage score was introduced was to kind of limit those odd variances that happen when you pull your Experian credit score or Equifax credit score or TransUnion credit score. So it's also there to limit the weird differences that happen between them. And, supposedly since all three credit bureaus got together to create this, how they judge your credit history is supposed to be more similar or more lined up. But the one disadvantage when it comes to the Vantage score versus the FICO score is when it comes to those inquiries. So when you get new debt or when you apply for, a new loan or new credit, that sort of thing, it can come in as an inquiry. Good thing is you can, batch those inquiries together. So like, for example, let's say you are looking to get an auto loan, but you want to make sure you get the most favorable terms as much as possible. You want the best rate, you want, the best loan that you can get. So you decide to, apply at different financial institutions. Let's say you apply at Fitzsimons, and then you want to apply at Wells Fargo, and then you want to apply at the online Ally Bank, and you just want to see who can give you the best offer. Well, with the FICO, as long as you're applying for roughly the same amount within a 30 to 45-day period, those get batched together as one inquiry. Now with the Vantage score, unfortunately, you have a shorter time frame when it comes to shopping around. So you need to make that application process happen within a 15-day period for it to get batched into one inquiry. But another thing I do want to note, this is really great news, since more and more of the public have become more educated about their credit score and credit history, this is equal to the general credit score on average going up. So even though 2020 was a weird year, the credit score or average credit score increased again, and last year the average was about 710. Some sources say 711, but either way, that's a good thing. And the Vantage score also increased. So on average, the Vantage score increased and is at 688. So that's a good thing. And I do want to apologize for me mixing up between FICO and Vantage score, but that should be Vantage score at the top. So a typo on my part. As just a nice reminder, if you're a member of Fitzsimons, we do offer your TransUnion credit score for free on our online banking and mobile app. But that's the same for a lot of financial institutions these days. You're able to get one of the credit scores from one of the credit bureaus, at least for free, every time you log in and check that. A cool thing about ours is you can also see the average zip code in your area and see how you compare. Another thing I want to note, a lot of people ask me about Credit Karma. And I do want to let you know, it is a good site for you to go and check and see what your credit score is. They provide you with the TransUnion and Experian credit score. And the way they're able to offer that for you for free is because they have all those credit card offers or loan offers on their site. But you can definitely check Credit Karma for your credit score as well. So things that factor into your credit score or don't factor into your credit score. So things that don't go into your credit score is how much money you make, your assets, your debit card, because technically your debit card is, cash or money you have, your demographics, government assistance, those sort of things. So the reason why credit scores exist is to kind of create a really fair and balanced system to kind of help determine the credit worthiness of a person. Because back in the old days, we're going to say, let's say you wanted to buy a car from Carl, but Carl wanted to know if you were a good person or not. So he would ask Bob, and Bob's upset because you didn't return his hammer and you couldn't get a car loan to get that car. I don't know, it's just an odd example, but that's how things used to happen. So this is why credit reports and credit scores exist, to kind of create a more favorable system. It's not perfect, and there's still a lot of things that could be improved on it, but it is a more fair and balanced way to do things. Let's see. I did just want to check because I did see there was a message that came through. But I'll check that at the end. I'm having a hard time bringing that up, so I apologize, but I'll make sure I'll read that message. So what's in a credit report? So you will find your information like your name, social security number, date of birth, address, Your employment history, now it doesn't always factor in all your employment history, but you can find that on your credit report. Any sources of, lending you have, so any credit cards or loans that you have will appear on there. Unfortunately, any bankruptcies, judgments, all those sort of things, so like bankruptcies, they can be on your report from about 7 to 10 years, and that can affect your ability to take on new credit. Let's see. And it will also bring up any inquiries that you have as well. So some inquiries that people might be surprised might appear on there. Like, let's say you go down to T-Mobile and you decide you want to be on that phone payment plan. That can sometimes come up as an inquiry. So it's not always like the obvious things, like opening up loans and stuff like that. But it also can be things when it just comes to taking out any sort of, promise of paying back something if you're borrowing money. For Brittany, what were the 2 reports that Credit Karma checks? So they check TransUnion and they also check Experian. Since I saw that come up, I decided to answer it real quick, but I will be sure to check everyone else at the end. Now, an important thing for you all to know is, thanks to the FACT Act, that you can all order your credit report for free from each of the credit bureaus. I don't know if anyone remembers these commercials, but there used to be a weird dude on a guitar that also sang about freecreditreport.com that wasn't actually free, but I can guarantee you that the annual creditreport.com is free, even though it's not the fanciest website. It really needs to be updated. It's weird. But you can check your report for free for Experian, Equifax, and TransUnion. So a lot of people decide to divide this up throughout the year. So let's say at the beginning of the year, they check their Experian report, and then 3 or 4 months later, they check their Equifax report, and then, towards the end of the year, they check their TransUnion report. So why would you check all 3 reports, you ask? Well, even though for the most part they all have the same information, little discrepancies happen, and you want to make sure everything is up to date as much as possible. But yeah, also another thing to note, if you sometimes go to the official Equifax, Experian, or TransUnion websites, sometimes they'll even charge you for checking your report, or they'll give you like an entry offer. You get to view it for 1 month free, and then they'll start charging you a fee as well. So that's just a thing to note. And the annualcreditreport.com is the only site that you can check them for free completely. So that's just the thing I want to note, is even on the official sites, you might get charged a fee. What happens if your credit report has errors? Well, the law entitles you to be able to correct those mistakes. And these can happen for various reasons. Unfortunately, sometimes it can happen if someone steals your identity and is taking out credit under your identity. Hopefully that does not happen, but it does happen. And sometimes the credit bureaus make mistakes, either because you have a similar name to someone, or I don't know, maybe your social security number is 1 digit off and someone made an accounting error, and then all of a sudden you ended up with someone's loan. That's also why you want to check yearly and make sure everything is up to date. If you do see an error, you have to file a dispute online or write to a credit bureau within 30 days, and they have about 45 days to investigate, notify you of the results, and get rid of the information. Now, if they don't get rid of the information, they will put a note that basically states, hey, this person is challenging the information on this report, sort of thing. So there will be a note of, any inaccurate information in one way or another. So the credit bureaus are supposed to communicate with one or another when, these mistakes do happen, but it's best to communicate with each of the credit bureaus if you see a mistake on one report with one of the credit bureaus. Because, we all know communication sometimes doesn't happen like it should, so it's always a good idea to, make sure you take things into your own hands and communicate with all 3 of them. So for example, I know you can check the TransUnion report on the Fitzsimons site also for free. It is a basic version of your credit report, but you are able to view pretty much all the information that you would see on the one at the free credit report website. We also give you a sample lettering or sample letter that you can send to the credit bureau if you do see any information that is inaccurate. And there's a lot of templates online as well that you can also utilize. Credit report warning signs. So if you see any, these are like red flags that you should keep notice of if something is happening that shouldn't be happening. So you see a flurry of opening of accounts or loan applications, you see someone else's debt, all those sort of things. Basically, any information that is not yours should be a cause of alarm, and you shouldn't ignore it at all. So, if you don't have a credit history or you're in the process of building up your credit history, there are some steps you can take. Just a simple plugin. You can open up an account with a credit union. Or, there are more alternatives coming up. There are places like Rental Karma, which is giving you the ability to basically report the monthly payments you make on rent to the bureaus and use that to build up your score. Experian also came up with something called Experian Boost. And from what I found, this is completely free. And you can do things like with your phone payment or your Netflix subscription, or again, your rental payments. You can use those and have those reported to the credit bureau. But this is through the program Experian Boost. It looks like it's a great program, and I love that more and more companies are coming up with alternative ways to help everyone boost up their credit. Just a note with Rental Karma, it does cost a monthly fee. But there is a site called Love My Credit Union, and they do have a discount on there. And you don't necessarily have to be a member with Fitzsimons Credit Union. A lot of credit unions have a relationship with the Love My Credit Union website. So you just choose your credit union, and then they offer a nice discount. Or you can do what I always do and just search for coupons online whenever it comes to purchasing something or getting a subscription, because you want to get the best deal possible. Some other things you can do is look at, doing a credit builder loan or getting a secured credit card. So a credit builder loan, it's not, how do I describe it? With a credit builder loan, basically you are opening up a savings account that you will not have access to, and you'll be making, basic payments into that savings account from about a 12 to 24 month basis. So let's say you're paying $50 into the savings account each month. These payments made into this account are basically treated almost like a loan payment. This loan payment gets reported to the credit bureaus, and this helps boost up your credit score by about 10 points or so. These credit builder loans are usually set up for a very small amount. So usually the max of them is about $1,000 or so. Some of them do have a small fee, and some of them do charge a little interest, but they could be a good source. I noticed they're really popular for people that are, let's say, trying to get their first auto loan, and this credit builder loan could be a good way for you to, one, create a down payment. So for example, once you pay off that credit builder loan savings account, the funds in that savings account opens up to you, and you can use those funds that you paid into that account. So voila, you have $1,000 for a down payment. But it's good if you're like on the edge of a certain area and you just need to build up your score just a little bit. A secured credit card or a credit builder credit card is essentially very similar to regular credit card, except a lot of those credit card companies see you as a risk because either you don't have the greatest credit score or you're new to the area, so they require you to set up a savings account, and you put $300 or $400 in that account as a collateral, and then they will give you, let's say, $400 as a spending limit on that credit card to use. And then, over time, you use that credit history to build up your credit score. And with those credit builder credit cards, you don't always have to spend a large amount each month. Like, for example, you could just, make a monthly restaurant run, and then, pay for that restaurant meal with that credit card, and then just pay it off right away. And then, it saves you from acquiring any interest payments or anything like that, and it helps you build up your score. More ways to establish credit history is you can be a cosigner on a few credit card accounts. So this is usually popular if, you have a close family member who has a good established credit history, and they don't mind basically you backing off their good credit history. You only want to do this with someone that, has a good history of paying their accounts off on time, though. If you do have a down payment, you can use that to either get more favorable terms on a loan. And as mentioned, there's a lot more alternative ways to get more information reported to credit bureaus. So, you got the Credit Karma, the Experian Boost, those sorts of situations. And this isn't always a guarantee, but some credit card companies, or, you can also sometimes do this with personal loans, will give you a limit increase to help with that utilization rate. So a thing to mention with credit cards that do factor into your credit score is the utilization rate on your credit card. So I think I explained this a little poorly early on, but let's say you have a credit card and you have a limit of $1,000 that you can spend on that. Ideally, you're only supposed to spend about 30% of that utilization rate. So the less, the better. I know it's a really odd system, but creditors apparently don't actually want you to borrow the money that they're allowing you to borrow. But usually when it comes to those things like credit cards, usually you want to keep that utilization rate as low as possible. And as always, you want to make sure you're paying debt on time. And if you can, automate everything as much as possible. Like, if you're very forgetful when it comes to paying things in a timely manner, make sure you set it on a schedule so money is automatically taken out of your account and directed towards that loan. Just always make sure you're aware of what's in your account, because you don't want to deal with, fees from, having a limit basically going below zero. But just a thing to note, if that does happen to you, most financial institutions, if it's a once in a while thing or it's the first time it's ever happened, you can call them up and they'll usually take off that, NSF fee or, fee that's required from basically going below zero in your account. Now, if you do that a lot, no, they're not going to do it. But, we're all human. We all make mistakes. And, most likely you are talking to a human on the phone and they've also made similar mistakes. So they'll be more than happy to take that fee off for you. And as I mentioned earlier, budget, track expenses, and save. Again, more of the same thing. This one mentions that 25% utilization. It's actually 30, but if you can get it below, the better. Never close your old accounts. This is especially the case with credit cards, because that first credit card you get basically is your introduction of any credit history you have. So basically, if you're 5 years in of building your credit history and you close off that first card you have, that can make a huge impact on your score. But for example, let's say you've had an established credit history for 30 years and you got a credit card, let's say 2002 and another one in 2003, not as much of an impact, but you definitely want to try to keep that original credit card you got open. Even if it's not the most favorable card, sometimes, you just got to put a little bit on it. So, just buying a candy bar at the grocery store, paying it off right away, and just to, use to keep it open. And, if it ever does close, you can always call up the credit card company and ask them to open up again, as long as you do that in a timely manner. That works too. But usually credit cards are considered active as long as you use them at least once in a year. When it comes to those inquiries, be careful of how many accounts or loans you apply for at a time. So as I said, you can batch inquiries when it comes to loan rate shopping. Never co-sign a person, well, you don't really know, or just don't co-sign with someone. It sounds bad. You do want someone with good credit history to co-sign for you, but you don't want to co-sign for everyone else or anyone else, because basically what happens when you co-sign with someone, you're basically making the agreement. If this person doesn't pay off this loan or the money they borrow, you'll be on the hook. So you never want to do that unless, you really know that person very well. And I know it's different when it comes to family or partnerships, but it's something just to be really careful of. And definitely if this person is shown not to be good with their commitments or paying things off on time, please don't do that. Just, let them know, like, hey, I do care about you. And maybe just like give them tips on, how to get to that place where they don't need a cosigner. But definitely do not make yourself or put yourself in that situation. Pay your debts on time. And this is kind of random, and this can happen. Usually it happens when it comes to medical fees or, medical expenses. But for things like library fines or government debts and those kind of things, those don't automatically show up on your credit report. But if they get set to a debt collector, all of a sudden it can affect your credit history and your credit score. So just make sure you're on top of those types of things before they get sent to a debt collector, because that can make a huge impact on your credit. The pros of credit cards. So, credit cards aren't necessarily a bad thing, especially if, let's say, you basically aren't borrowing money you don't necessarily have. They do help build up your credit history and credit score and all those kind of things. And in some ways, they can be really good when it comes to shopping online, because let's say you happen to be in an area where, fraud occurs, you are able to challenge the payments on those cards, and, you're basically borrowing money that it exists, but you're borrowing it. So you're able to cancel those payments, those things faster than if someone took your debit card information, was taking money out of your account. A lot of credit cards have reward systems or, benefits, those sort of things. And especially if they fit within your lifestyle, they can, give you lots of nice things. And, as long as you are paying those credit cards off in time, basically, sometimes those credit card companies are paying you to use them. As mentioned earlier, you have a maximum liability of $50 if you report a missing credit card within 2 days. So that's a nice thing as well when it comes to credit cards. Yep, and it's safer to shop online. But some of the negative things about them is they can have, annual fees, really high interest rates. A lot of credit cards have usually an interest rate around 18 or 22%. So, for example, let's say you spend $100 on items and you don't pay off that credit card in time, automatically you get charged an extra $18 or $22. And you definitely don't want to put yourself in that situation. And that's why I put so much importance on having an emergency fund, because when those emergencies do happen, you want to take it out of a savings and not have to necessarily borrow money. With the risk of, having extra interest every month and taking more time to pay that off. Because that's just more money out of your pocket in the long run. So things you should always watch out for is, any fees. A lot of credit cards will waive the annual fee the first year, but then that fee might appear years after that. So for example, let's say you get a credit card and they're like, hey, open up a credit card and we'll give you a $500 bonus, which is great. But then you find out the next year they charge you $95 each year, and you just aren't really using the points on that card like you thought you were. So unfortunately, over time, that's just a lot of money out of your pocket. So that's just something to be aware of, and just making sure that that credit card is the right fit for you. This isn't as common, and they'll definitely notify you if anything like this happens, but be aware of any rate increases, or, you know, if you aren't paying your credit cards on time, you can get late payments and all those sorts of unfortunate fees. So just make sure you do your research. A good website to do your research and, you know, outlines all the different credit cards that are out there and all the fine print information and all their benefits and those sort of thing is NerdWallet. So if you are in the market to get a new credit card, that's a good source to check out. And they also give you information on credit builder credit cards / secured credit cards or travel credit cards and that sort of thing. Whoops. And yeah, well, that's about it. So the homework I have for you, and I'll be sending over this digital packet, is, you know, is to set smart financial goals for yourself, create a budget / spending plan, check your credit score, check at least one of your credit reports from one of the bureaus from that website for free, and, you know, just create a game plan for yourself so you can reach those goals that you have set out. And if you do want to talk to someone about either, you know, setting up an account or opening up a loan or that sort of thing, you can talk to Daniel. And we just opened up what is basically our e-branch. So basically you can meet over with Daniel online with a video meeting, so you don't even have to, you know, go out of the house or anything like that. You can just, you know, be in the comfort of your home and, you know, get everything done there. And we can do the whole application process for everything completely online as well. So we make things as convenient as possible. And the mobile version of our application is awesome because you can just take a picture of your ID and just autofills everything. It's really nice. All right, now for the gift card winner. So if I could, I would have like a drum machine in the background. So the winner of the 25 Visa gift card is Amanda. So Amanda, I will be sending you a message and with information on how to, you know, collect that or for us to send that over. But congratulations, Amanda Mendoza. I hope I said that correctly. All right. And congrats. All right, what questions do you all have? So I'm gonna start at the top and go through the bottom. But yeah, thank you all for attending. If you don't have a question, feel free to, you know, go about your evening. This webinar will also be recorded and placed on YouTube. So if you ever need to refer back to everything, feel free to do that. I'll also be sending out a follow-up email with a link to the recording of this webinar and, of course, you know, all this information as well. But yeah, have a wonderful evening, everyone. All right. You know, I'm just going to answer Brittany Cook's question again, is what were the two reports that Credit Karma checks? It is TransUnion and Experian. You can check TransUnion through the Fitzsimons online and mobile banking site. TransUnion seems to be the very common one. Equifax is one I don't see very often. I don't know if it's because of the scandals they've experienced in the past, but Equifax seems to be that one that's harder to get information on. But a lot of financial institutions offer either TransUnion or Experian. What IDs does Fitzsimons require us to open up an account? Just basically any government issued ID. You can, usually it's a driver's license or a state ID. Passports are even really good. Actually, passports are even more official because you have to use another series of government documents to get that one. But usually you'll need one picture ID, and then you'll need either a social security card, birth certificate, something like that. But it has to be government issued. But we also accept ITIN numbers as well. So if you don't have a social security number, we also do ITINs as well. What are the pros versus cons of consolidating student loans? Because student loans is such a tricky topic, and it's not really anything, unfortunately, Fitzsimons deals much with, but I can refer you to more of our debt management experts, which are Manny and Kim. So I'll check in on that information for you, and I might be sending you a direct email so we can help you out with that. But unfortunately, student loans are very tricky, and I wouldn't be qualified to begin that topic for you. How much does your credit card score drop, if any, when a credit card company closes your account due to non-use? It really can depend on many different factors, because it can depend on, again, that length of credit history. So like, for example, I used, like, let's say you only had established credit for 5 years versus 30. And let's say if you had established credit for 30 years and you got a credit card 1 year and then a credit card the year after, obviously if that first credit card drops, it's not as much of an impact. But if you're fairly new, it can. So what I've seen is it can drop anywhere from like 30 to 50 points, sometimes 100, but I think 50 is usually what happens. But again, it really just depends on various factors, like your length of credit history and so on, and your diversification of the credit you have. It can really depend. But if it does drop, or if they do close a card, you can always follow up with that company really quick and see if they can reopen it for you. It could be too late, but usually the good thing is it can be fairly, if you have decent credit, it's usually fairly easy to rebuild it up again. But if you do see a credit card is closed, see if you can follow up with that credit card company and see if they can reopen it for you and basically show that same, opening date from when you originally got it to help with that. You can also, if you have good repayment history, ask to increase your basically utilization rate. So for example, if you originally got that card for utilization or spending limit of 1,000, see if they can increase it to 2,000 or 5,000 or anything like that, especially if you have good history of paying things off on time. Oh, I love this webinar. You have some amazing points. I heard some Dave Ramsey in there. Thank you, Sarah. That's really sweet. So it sounds like you can hurt your score and budget by applying for credit cards that you don't need and know that you won't use. Canceling them when the annual fee begins would hurt your credit score, even if you never use the card. Keeping the card and you pay the fee every year. Yes, unfortunately, basically with credit cards, you are stepping into an agreement, similar to when you take out not a loan. When you take out a loan for a car, you're basically promising, hey, I'm taking out this $10,000 and I'm making a promise to pay this back. Fortunately, with a credit card, it is kind of a similar agreement, even if you haven't used it yet, because it does get added to your credit history. Because you're basically making an agreement with that credit card company that you're going to keep up with this contract from on and on and on. And unfortunately, if you are younger when it comes to establishing your credit, closing out that credit card can have a huge impact. So for a personal example, when I was like 18 or 19, I don't know, super young, I was at Kohl's, and of course they're like, hey, do you want a nice discount if you open up your Kohl's card? And I said yes, because I was young, didn't know anything about credit cards. So that's what I did. Never used it after that point. And, I hadn't used it in over a year. And then one day they just decided to, close it out. And that did impact my score about 30 or 40 points, which was devastating for me at the time. But that unfortunately is what happens when you decide to open up a credit card. And I know especially when we're younger and, you don't have anyone to teach us this stuff, we go into these agreements without thinking. So yes, never open up a credit card unless you intend to use it. And I know a lot of people sometimes have a credit card for emergency situations, which, isn't a bad thing. Just keep in mind, if you do have that credit card, just use it once a year. And, you don't even have to put that much on it. Like, even putting $5 on it counts and keeps it open. So, you can just, like, go into Target and get 5 things from the dollar section and then go online and just pay it off right away. And that just keeps that credit card activity going. And that's what you can do if you do want to have a card for emergency situations. Do you have any branches up north in Northland and Fulton? Not yet, because we just increased our field of membership in 2020. Crazy year, but we are working on expanding our branches in the area. But if you do, you can come into any of our physical locations up in Aurora. But like I said, you can do a lot of appointments online. We are very, mobile, online friendly. You can almost do anything with us online. And then once you do set up that account with us, we are part of what is called the Shared Branch Network, which basically means you can almost go into any other credit union and do basic transactions just as if you were at your home credit union. So like, for example, Canvas is a common one. So let's say you open up an account with Fitzsimons, you can go to Canvas and, you can deposit money there, withdraw money there, deposit checks, make loan payments there. So a lot of credit unions are what is part of that shared branch network. There are a few that aren't part of it, but there is a website called the Credit Union Co-op, and you can basically search for all the credit unions in the area that are part of it. You can also go to our website, www.fitzsimonscu.com, and if you go to our branches and locations, it shows us our branches, but you can also look up all the branches and ATMs that are part of that shared branch network. So a lot of ATMs are part of that network. It's like the second largest ATM network in the nation, and a lot of those are surcharge free, so you're not getting charged for taking out money in your own account. So that's nice as well. So for example, a lot of ATMs inside 7-Eleven are part of that network. So that was just a quick rundown. Let's see. And it looks like those are all the questions we have. So I'm going to just double check and make sure. I'll pause for a moment in case anyone wants to add anything else in. All right, well, it looks like we don't have any other questions. So I want to thank you all again for joining us this evening. I will be sending a follow-up email with all sorts of information. And if you do want to get in contact with me or anyone else, just feel free to reply to that email. And we'll definitely reach out and help you with anything you want to learn more about, or, assist you if you are looking to open up an account or loan, or if you just want to talk to a financial consultant about anything. But thank you all again for joining me this evening. I hope you all have a wonderful dinner and wonderful evening, and, feel free to go and relax because you did something good for yourself by, educating yourself about finances. So thank you all again and have a wonderful evening.